Onto your markets news now. Asian markets mostly held steady at closing but remained on edge as Ukraine signaled readiness to accept a month-long ceasefire, while U.S. tariffs on steel and aluminium imports also kicked in. Japan's Nikkei share average closed slightly higher. It was up 0.1% higher after seesawing between gains and losses throughout the day. Hong Kong's benchmark Hang Seng index fell 0.7% and it took that to 23,600 points. U.S. stocks closed lower but reduced the scale of their losses earlier in the session as a threat of fresh U.S. tariffs along with hopes of a possible peace deal between Ukraine and Russia fueled volatility. The latest tariff threat added to investor unease that Trump's trade policies, which include tariffs against Canada, Mexico and China, could trigger an economic slowdown or cause a recession. The S&P 500 shed 0.7% while the Nasdaq Composite lost 0.2%. The Dow Jones Industrial fell 1.1% and set at 478.23 points. Back home, the all-share index is currently up 0.1% and it's sitting at 87,228. Look at our currencies at this hour is that the rand is sitting at 18 rands 38 to the US dollar, is sitting at 20 rands 06 to the euro, and still sitting at 23 rands 78 cents against the Great British Pound. Another look at this hour at our commodities: gold down at 2,914, platinum down at 981, but the price of Brent crude oil compared to at 12 o'clock when we started the show has gone slightly up, currently now at $70.24 a barrel of Brent crude oil. Chantal Marx is the head of investment research at FNB and she's our market watcher for today. Chantal, thank you so much for joining us. We're just minutes away from the budget speech. How has the market been in anticipation of it throughout the day?
Well, the JSE has actually held up remarkably well, and we've seen some strength in the SA Inc. stable as well. Small caps and mid caps up so far today, as well as the financial sector, which basically tells us that the market is expecting an equity-friendly budget. The contrast is true on the bond side. We've seen bond yields slip, although we have seen bond yields move up across most of the world so far today. So you can't really read too much into it. The rand, however, tells us that there's a little bit of nervousness in the market currently, potentially surrounding the budget. So yeah, it's up and down depending on where you're looking.
Right. So there's been a fierce debate, obviously, since last month about whether or not VAT will be increased. If so, how much? But what are those who have but there are those who say an agreement may or may not be reached. What will this mean for investors if it does not go ahead again?
So I think that a budget will be tabled today, but there might be a fight around whether it gets implemented or approved. And I think that that's going to be quite negative. If the budget doesn't go ahead today, the budget policy the statement doesn't go ahead today, it would also be quite bad. And the big reason for that is just it reduces confidence in the government of national unity, and it also introduces uncertainty into the South African economy. Markets do not like uncertainty, so I would expect a negative equity bond and rand reaction if either the budget statement was delayed again, or if alternatively the budget gets put forward but isn't passed in Parliament in a few days' time.
Yeah, what are your predictions at FNB for today? Where are we likely to get the shortfall in revenue from, or should we get it from?
So it's been very difficult to predict where that shortfall in revenue is going to come from, because the VAT story really was unexpected for most economists and for most of the analysts on the streets as well. No one saw the 2% VAT hike coming, but we also didn't foresee that government was planning to increase expenditure by quite as much. In terms of the last 12 months, revenue and expenditure wasn't very far away from what the National Treasury was predicting at the same time last year. So that in itself wouldn't have been an issue. We don't foresee that there would have been too much fiscal slippage in this financial year, or the last financial year. But going ahead, spending plans may need to be adjusted in order for us to make the books balance.
Yeah, I want us to move away from the budget a little bit and go over to the US, but I just want to remind our viewers that on the blocks, the corner there, that is currently what is happening in Cape Town. Our team is out there monitoring everything for you. So come 2 o'clock, everything will be ready. But Chantal, still to you, US markets are still to recover since yesterday's sell-off. Those tariffs on Canadian steel and aluminium set to take effect today. Educate us on what this means for trade relations between the US and Canada going forward. Is it war all out?
Well, it certainly doesn't look like a peacetime situation from a tariff perspective and from a geopolitical perspective between the US and Canada. I think in terms of trade, it's going to be a bumpy ride over the next few months and potentially the next few years. Obviously, the US wants something from Canada. They want concessions from Canada in terms of reducing tariffs on certain of the goods that are imported from to Canada from the US. And now it's kind of at a stalemate where the situation has, or the kind of the tariffs implemented by the US has instead resulted in Canada introducing further tariffs as well and removing certain US goods from their stores. So it's complicated. It results in uncertainty. It adds to volatility in markets. And yeah, I mean, I think that there's no clear resolution in sight.
Complicated, definitely. I've been speaking to Chantal Marx. She is the head of investment research at FNB, and she was our market watcher for today.